Gold edges higher due to consumer confidence hitting a 9-month low. Also, Mario Draghi, a no-show at Jackson Hole. We'll be asking Jim Yckoff all this on Technically Speaking. Jim Yckoff joins me this Tuesday for Technically Speaking. Jim, thanks again for being with me.
Hi, Daniela. Nice to be with you again.
So, Jim, consumer confidence hitting a 9-month low early Tuesday morning, obviously having an impact on gold, helping it quite a bit.
Yeah, we had that consumer confidence reading come in lower than expected, which bolsters notions that the Federal Reserve will implement some kind of monetary stimulus package in the near term. And of course, we are awaiting the Jackson Hole meeting with Ben Bernanke's speech on Friday for any fresh revelations on such.
Jim, you mentioned Jackson Hole this Friday. Draghi apparently too busy to show up. What message does this send to the marketplace?
Yeah, the Draghi not showing up at the Jackson Hole confab this week is a bit of a surprise. I think part of the reason him not showing up is he did not want the media parsing his words, what he may say, and then interpreting that to mean something he does not want it to mean. Also, it suggests that Draghi at next week's central bank meeting, ECB meeting, will probably unveil something important, and he didn't want to do it at the Jackson Hole confab.
Jim, it just seems that the market is acting in anticipation for a QE. It almost seems like the Fed doesn't even have to announce one.
Well, I still think the marketplace is unsure what Bernanke is going to do and when he's going to do it. I think with last week's FOMC minutes, I think that it did push traders and investors more toward thinking there is going to be some fresh stimulus coming. Today's weak consumer confidence index is another indicator. So I guess we'll see. But the marketplace is on edge, treading water in many markets, awaiting some fresh news from the Federal Reserve.
All right, Jim, it's now time for your Yckoff market rating system for gold and silver this week.
Daniela, I'm giving both gold and silver a 6.5, which is bullish. We've seen upside breakouts in both of those markets on the daily charts, and the bulls do have upside technical momentum and the overall near-term technical advantage in both markets. We're seeing on Tuesday here, we're seeing just some consolidation, some profit taking, not unexpected, especially given the strong run-ups we've had recently.
Okay, Jim, let's wrap it up now. Key numbers for gold and silver. For
the gold market, we've got psychological resistance at 1,700. We've got solid technical support at the 1,633 area, and that's basis December gold. December silver, we've got some solid overhead technical resistance at 3,150, and we've got strong psychological support at $30.
All right, Jim, thanks so much, and I believe you have an announcement to make.
Well, Daniela, I wanted to touch on a new product I'm going to be producing forthcoming, and that is a Forex analytical chart product. And in that, I'm going to be providing daily charts on several key Forex pairs along with the US dollar index. And the reason I'm doing this is that the Forex market plays an important role worldwide in helping determine the ultimate overall price of precious metals and other commodities. And the reason is, if you're an investor or trader and you buy gold or any other market in another currency, then you need to take into account the foreign exchange rate or the exchange rate value of your currency versus the product that you're purchasing in another currency. So my mission at Kitco is not only to provide analysis and perspective for our listeners and readers, but also to give them some education. And I think this new Forex product is going to provide them some good education, some good perspective on why it's important to keep a close eye on the foreign exchange market.
Right, Jim, and this kicked off yesterday on Kitco.com, and I urge all our viewers to check it out. Also, this will be a daily feature, right, Jim?
Right. One more point, Daniela. As I've said many times, and as long-term market watchers know, the price of gold and silver on a daily basis tends to be influenced by the value of the US dollar or the value of the euro currency. So I'm also going to be producing some analysis on those particular currencies to help give traders a better daily view of where the precious metals markets might be heading based upon those currencies.
Jim, just one final note on currencies. I believe that usually the Australian dollar and gold move in tandem, but this has not been the case lately. What are your thoughts on that?
Well, the Australian dollar is a commodity currency, much like the Canadian dollar is, and that means that much of Canada's and Australia's gross domestic product is derived from commodity exports. So the fact that if commodity prices in general are rising, then those currencies probably are going to be rising too. I think the stronger correlation between the price of gold and another currency on a positive basis would be the euro currency. And then, of course, on a negative basis would be the US dollar index.
Thanks for your thoughts, Jim, and thanks for watching this edition of Technically Speaking. You can email me, as always, at newsfeedback@kitco.com, or better yet, tweet me at Daniela Cambone. Thanks for watching.